Hello and welcome to The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. Now, today I'm joined by David Schassler. He is portfolio manager and head of quantitative investment solutions for VanEck. David, thanks for being here.
Thank you so much.
So I want to get into the headlines we're reading about high inflation. What are you seeing out there? Are you expecting high inflation to continue?
So inflation is the highest it's been in almost 40 years. We overstimulated the economy at the same time that our supply chains were delicate. Those same conditions exist, while lessened, they still exist today. So if you look at what's going on right now in the economy, interest rates still at zero. Fiscal stimulus, we're still trying to push up trillions of dollars in infrastructure spending. Build back better. So there's a lot of spending at the same time that we're extraordinarily accommodative. The Feds, while tapering, are still out there actively purchasing MBS, Treasury securities. So it's still a very stimulative economy right now. At the same time, the COVID pressures remain. So our supply chains remain delicate, although have healed some, are still delicate. At the same time, this new Omicron variant is out there. So unfortunately, I do have to say that I do believe inflation is going to be persistently high for some time to come.
So if that's the case, then how should investors be thinking about protecting themselves, their portfolio?
I think you have to go back and look at what's worked historically, what's working now. If you go back to the 1970s, commodities, gold, natural resource equities. Go back to the mid-2000s, commodities, gold, natural resource equities, infrastructure. These core real assets have proven themselves to be time-tested inflation hedges. These are also the same things that are working now. So I think that investors should really look at real assets in their portfolio. Great historical hedges for inflation, great historical hedges now.
So of course, we're talking inflation. VanEck, you have an ETF here at the New York Stock Exchange. It's the VanEck Inflation Allocation ETF, RAAX is the symbol. Could you talk a little bit about this ETF for us?
Sure. So the idea of this ETF is really simple. Take the key inflation fighting assets, put them together into one vehicle, risk weight them, and then allow the assets that are most in favor to be the largest weightings. So it's really just that. It's commodities, natural resource equities, gold, infrastructure, MLPs. We even have some exposure to Bitcoin, which a lot of people look at as the new digital gold. Very small allocation, but it's in there as well. So really what you have is it's one dynamic core allocation. I think it's a one-stop shop for inflation protection, really the goal of the vehicle.
So you've got this ETF focused on inflation. What happens if the reverse occurs, right? If high inflation does not persist, how will this ETF perform?
Yeah, so I think you should have inflation protection regardless if inflation is at 2% or 10%. The thing with this ETF is really simple, is that certain real assets work really well during periods of really high inflation. Certain real assets work well during periods of lower inflation. For example, REITs have just been a great performing real asset regardless of the inflation cycle. Certain real assets haven't been. Really, I'm talking about commodities now. So the job with this ETF is to overweight the assets that are in favor at that time. So we don't view this as an instrument to own just during periods of high inflation. We think that this is a core allocation within your portfolio that's going to give you that dynamic exposure over time, and it's going to be a differentiated source of return than the rest of your portfolio. So we definitely think it belongs in your portfolio regardless if we have a high inflation period or a low inflation period. But I'll go back to what I said before. Unfortunately, I do believe that we are going to be in this period of heightened inflation for some time to come. And I think that if you look back 10 years from now, I think that we're going to look back and see that the assets that worked the decade prior are unlikely to lead the market forward, because I think we're going to have persistently higher inflation, maybe not extremely high inflation for the entire decade, but an elevated level of inflation, certainly than what we experienced during that really low inflation period of the last decade.
So talking inflation with David, as a reminder, if you caught this episode live and you're looking for more ETF thought leadership, you can find it on our website, homeofetfs.com. That's homeofetfs.com, all brought to you by the New York Stock Exchange, the home of ETFs.